So what I'd like to do in this session is I'd really like to, do I need to stand up here, Julia? You can see me, okay? What I'd really like to do is leave you with a sense of the options that you have with impact investing as individual investors, okay? So bear with me, let's take a look at a couple of things. The first thing I'd like to do though is I want to do a preamble on ESG investing. So what is ESG? I think it's a term that should be discontinued. I think it's a terrible term and should be discontinued because it's ambiguous. So it's either inbound ESG, which means it's accounting for the effect of ESG factors on a company, or it's that plus also outbound. So it's measuring the impact of ESG factors on a company, but also measuring the impact a company has on society and the environment. Both of those two things, which are very, very different, are subsumed under on the topic of ESG investing, which is why I think it should be discontinued. Whereas I think the sustainable investing, I think, is completely unambiguous. Sustainable investing is inbound and outbound. Now, different organizations do it differently, and it's hard for people to understand, to know who's doing it how. And I would say most of the trauma, the frustration, the accusations of greenwashing revolve around this issue, that nobody's distinguishing between in and out. Because I would say a sustainable investor expects it to be inbound and outbound, but a lot of the asset management establishment just looks at it as inbound. And let me give you an example of what this looks like. Let's take Chevron. Chevron's an oil company. MSCI gives ESG ratings based on inbound impacts. And so it gives Chevron an A. What does that mean? It means that Chevron's got its environmental exposures under control, it understands them. It has a reasonable social positioning and its governance is okay, right? No mention of what impact Chevron has on society. So it gets an A. S&P Global assigns ESG ratings based on inbound and outbound. And if you're technical, we're talking about single materiality and double materiality, but I like to talk about inbound and outbound. So for S&P Global, Chevron is a problematic company because it has a strong impact on the environment. So here's an example. I'm a sustainable investor, and I can't figure out why the hell Chevron is in my ESG investing portfolio, and the answer is because under inbound, it's appropriate, and under inbound and outbound, in other words, under a sustainability strategy, that would be unusual. So let me now switch to impact investing, which is my area of expertise, and this is a definition which I hope will look familiar to you. So it's impact investments are investments made with the intention to generate positive, measurable social and environmental impact alongside a financial return. But there's an ambiguity here too, which is really, really important. It's whose impact are we talking about? Are we talking about the impact you have as an investor, or are you talking about the impact an enterprise has? And those are two different things. So I've put it up on this chart. So on the right-hand side, you can see a company will have a real-world impact on society and the environment. The investor might have an impact on that company. There are typically two channels for doing that. One is through engagement and voting. So it's the way the investor or its agent, its asset manager, influences the company to improve its business practices, or it's through capital allocation. In other words, if we're giving additional capital to this company, to this enterprise, it's somehow having an impact on the enterprise. Now, the FCA just released its labeling consultation paper, and they make a very explicit distinction between enterprise impact and investor impact. And I would say most of the people in the room want to have investor impact. That would be my assumption. In other words, you don't want to just align yourself with a company that's doing good things, but where your capital has no impact. I think for most people in the room, you're looking for investor impact as a component of your impact strategy. Now, the real purpose of this discussion is to try to convince you that you can have impact across asset classes. For a lot of people, impact ends up boiling down to equity investment for some reason, which I never quite understood, and fixed income has never been as big a part of the conversation as it should be. The fact of the matter is, you can invest in impact across the asset classes. So you can move up the risk-return spectrum, and there's impact options really across the spectrum. Let's take a look at some of those. Here is cash deposits. Now, most investors don't think in terms of cash and short-term deposits when they think of having impact, but there are interesting options. So one is social banks. Social banks invest their deposits. They take deposits from depositors, and then they make loans to social enterprises, charities, and mission-led enterprises. And if you want to visualize what this looks like, in the bottom right, I've listed a couple of social banks that do this type of thing. They take in deposits and then they lend them out. What's interesting, if it's a bank, some banks can leverage those deposits so that £1 in deposits gets leveraged to £8 worth of lending. So it's quite an interesting way for your deposit investment, your cash deposits, to have quite a significant leverage, which doesn't happen outside the banking environment. And then I know the credit unions and building societies less well, but some of them can also do this. And then the key thing for investors is that there's FSCS coverage of £85,000. Moving up the spectrum into fixed income, what's really interesting is that, I mean, as I mentioned before, fixed income has been really a neglected area of impact investing. People don't pay attention to the role that fixed income can have in impact investing. But here is what sustainable debt issuance has looked like over the last couple of years. I mean, you can see just a absolutely dramatic growth in sustainable investing. Now, on the right-hand side, I've done the different categories. This is from Bloomberg. And obviously, you're not issuing loans, but you are anything that is a bond, you can probably access. So green bonds, social bonds, sustainability bonds, and sustainability-linked bonds. These are publicly available. You can buy them on issuance, or you can buy them in the secondary market. But you can see that there's been an absolute gold rush here in terms of the interest in sustainability fixed income. So not to be neglected. But if you're looking for tighter income, if you're looking for tighter impact, so higher impact fixed income instruments, there's also some interesting options here. So I've put up here at the top retail charity bonds. So retail charity bonds are a platform that allows smaller charities to issue debt that's then listed on the London Stock Exchange. They're not terribly liquid, but it is an opportunity for you to find some kind of liquidity and some kind of public access to to charities that are doing useful things in society. The next category is the social impact crowdfunders. There aren't a lot of them. I've listed 3, so it's Abundance, Ethics, and Triodos. I don't know if those names are familiar to you, but these are dedicated impact crowdfunders, and they are a place that you can also go for loans to small enterprises, community energy projects, or whatever. And that's readily available for retail as well. And then the third category is loans to responsible lenders, also known as community development finance institutions, or CDFIs. Now, how many of you have heard of CDFIs? That's what I thought. So CDFIs are, and I've listed at the bottom, I've given you some examples of CDFIs. These are lenders, they're responsible lenders, they're typically nonprofit, and they make lending capital available. They make loans to small businesses, typically in deprived areas that have not been able to access bank lending. It's a very important area. What's interesting for investors is that you can have access to community investment tax relief, or CITR, which to me is the UK Impact's best kept secret, and I'll come back to that in a little bit. So here are some fixed income options for you where it's really high impact. So people may have doubts about publicly issued social bonds and green bonds, but in this case, this is really high impact activity that's being funded by your fixed income risk. Now, moving up a bit in the risk return spectrum, here's real estate and infrastructure. They're usually only available for institutions. But this is interesting because there's an interesting option available for you. Investment trusts have gone in the last 10 years from 0 to 20 billion in impact-related investments. Okay, so there's now 31 investment trusts representing 20 billion in impact-related assets. It's mostly renewable energy. There's some social housing, and the sector is continuing to innovate. And let me show you a little bit what that looks like. So if you can read the chart, it's the old ones are at the bottom and moving up to the newer ones at the top. Green is renewable, yellow is social. So in the beginning, it really started with with renewables. So most of the issuance was renewables, and that's continued, as you can see in the bold. That's the continuation of renewable investment in investment trusts. So you've got investment in private markets wrapped in an investment trust, giving you liquidity, daily pricing, and then the regulatory supervision that you get from an investment trust. But even the climate-related stuff has started to broaden. So now what we've seen in the recent years, renewables, it started as renewables, it then moved into things like energy efficiency, battery storage. You now have forestry, hydrogen, and then the top one, the Thomas Lloyd Energy Impact Fund, invests in renewables in emerging markets. So this is what I mean by you get this innovation, this expansion of the categories of investment, and it's wrapped in an investment trust, which makes it largely accessible at really small bite sizes. On the social side, it's largely about social housing, but even in the social housing category, there are nuances. It's not all social housing, some of it is healthcare properties. Social housing, specialist social housing, so social housing for the homeless. And then finally, at the top one is a diversified fund, the Schroeder BSC Social Impact Fund. As it happens, I'm a director of that fund, and that's a diversified multi-sector fund with social housing as a large component, but not the only component. The other components being impact venture equity and lending to social enterprises and mission-led organizations. So interesting options for the two categories of real estate and infrastructure are available for retail investors in a pretty straightforward way. Now, let's get to equity. Can you have impact with listed equity, with large listed equity? Now, the problem with listed equity, back to my chart of who's having the impact, if you think about investor impact, you can have, when you invest in a large listed company, you can have impact on that company, you can have influence on that company and its business practices by the way you engage and the way you vote. So, so the way you can influence this company is largely through engagement and voting. Capital allocation, the fact of the matter is that a listed company is already capitalized. When you buy shares in a listed company, you're not giving money to that company. You're giving money to the previous owner of the shares. So it's hard to argue that capital allocation is actually a way of having impact in the listed equity space. There are products that are specifically designated as engagement products, and I've listed two, and by the way, if you can read the footnote, I'm not endorsing any of the products that I put up here, but I want to give you a sense. I want you to be able to visualize specific instances of this. And what I'm showing you here between Columbia Threadneedle and Federated, they've actually built large listed equity products that are defined where their value proposition to you as an impact investor is specifically engagement. Moving up all the way to the top in private equity and venture, I've put this large chart from the BVCA, so the British Private Equity and Venture Capital Association, simply to give you a sense of the number of options available from discretionary venture capital investors. So these are people that build venture funds. On the left-hand side, you have the small end. On the right-hand side, you have the large end of the venture private equity spectrum. So really lots of options. If you want to be doing impact, there's lots of options in venture, lots of options in private equity. The problem is most of these venture capital funds are going to have high minimums. That's pretty standard. but there are some that are as low as 20,000 pounds. And in some cases, they're structured so it's not a limited partnership, it's more of a managed account, so you have access to EIS and SEIS. You can also get you can also get startup exposure by going to dedicated crowdfunders. So the crowdfunders, if you look in the upper left, the dedicated impact crowdfunders who came up with fixed income options also typically list equity options. So if you go back to Ethics and Abundance and Triodos, they will have a mix of fixed income and equity, but you're on your own with respect to the due diligence. There's kind of a light due diligence that they're doing. They leave it to you to make the decision. But I want you to really think about the generalist crowdfunders as well, because the fact of the matter is that the people like Crowdcube and Cedars and Syndicate Room are so much bigger than the dedicated impact investors, the dedicated impact crowdfunders, that you'll actually find more options with the non-dedicated platforms than you will with the impact dedicated platforms. So if you're thinking about using a crowdfunding environment to do your investing, you should be looking at the non-specialist platforms in the lower right, because you will find people making contributions to society and the environment there, and in far greater numbers actually than in the upper left-hand corner. Now, how many of you are using EIS, SEIS, and other forms of tax relief? It's a small question, small survey here. But I guess the point I would like to make here is that tax relief is not about tax. Tax relief in the UK, whether it's SEIS, EIS, or CITR, is a subsidy for the investment delivered for whatever reason through the tax system. But it's not a tax thing. And it needs to be folded into your evaluation of the investment. And what a lot of people do, and a lot of financial advisors do, is they say, here's the investment, oh, and it's got tax relief, so we'll do that later when you do your taxes, and it'll reduce your taxes, which doesn't make any sense, because the value, the likelihood that this investment will make sense to you in the first place is dependent on the tax relief. And so if you look at, in particular, community investment tax relief, a qualifying loan to a CDFI will give you 5% tax relief for 5 years. For a higher rate taxpayer, that's equivalent to 9% per annum. So you can't really assess the value of a loan to a CDFI without capturing the fact that your starting point is a 9% pre-tax return. But a lot of people don't do that, and what they do is they look at the EIS or SEIS or CITR investments, decide that, well, that's too risky for me, or the return isn't high enough, because they don't arithmetically fold in the value of the tax relief into the assessment of the investment. And then finally, you can invest in each of these asset classes, as I've shown you. You can also look for a diversified portfolio of impact investments, either because that's the kind of investor you are, you don't want to do the company by company investing, or as a core holding, which you then supplement with decisions you make yourself on individual enterprises. So I've put two different categories. One is the Schroeder BSC Social Impact Trust, which I mentioned I'm a director of, which is a diversified, multi-sector, high-impact product listed on the London Stock Exchange. So you get liquidity and minimum bite size. And I've listed also Snowball, which is a similar kind of multi-sector, high-impact product, but it's a limited partnership with relatively high minimums. So that's one option. And the other option on the lower right is I didn't list any particular wealth managers who qualify as impact because I figured I'd get in trouble from the people I left off. So I simply wanted to give you a sense that there are wealth managers out there, there are good wealth managers out there who are doing impact, who are winning these awards, who can deliver for you a diversified portfolio with a high impact content, although not likely to be 100%. So that's kind of what I had to say to you today. I mean, I'd like to distinguish between impact investing and sustainable investing. I think impact investing very specifically is looking to create visible, measurable impact. There are opportunities in the listed markets. We talked about a few of those. But really the center of gravity for impact is in the private markets. And the question is, how does a retail investor, how does a private investor get comfortable in the private markets? If you are going to do a significant commitment to private markets, and if you're going to do anything at all related with tax, then I think you should be consulting an advisor. You shouldn't be doing this on your own. And mostly I wanted to leave you with a sense of lots and lots of options. Because when I talk to people about impact investing, which I do, it always feels like people have the sense that there aren't that many options. There are a lot of options. And if you don't have the time or the expertise to assemble them yourselves, you can always go to an impact-aware discretionary manager because they're out there. Some of them are really, really good, and they'll talk you through your impact strategies. So that's all I wanted to say. If you want to know more about impact investing, you can go to our learning hub at the Impact Investing Institute. There's the URL. I can't ever remember URLs, so I just Google stuff. And what I would recommend is you Google Impact Investing Institute and then Learning Hub. And you'll see a lot more of the kind of work we've done in multiple different topics and multiple different asset classes. So I'll leave you with that. I'd love to get either questions or comments from you. I realize it's a small group, but I'd love to get whatever feedback you can give me next time I do this. I fold that into this. Yes?
I would like to give you a compliment for your presentation.
Oh, well, thank you. You want to give me a compliment on my presentation. Well, thank you very much. The formatting didn't look like the way it did when it left my computer, but thank you.
I have been a speaker and a moderator on impact investing conferences for Africa myself in more years, and you have a lot of capable people, but this was such a good overview.
Oh, great. Well, thank you.
Valuable.
Thank you. I appreciate the comment. Anybody else want to make a compliment or ask a question? Okay, great. Well, thank you very much. It's been great to talk to you.